Choosing the correct time frame does not have to be confusing, alright guys, so I'm going to break it down in this video. Welcome back everyone. If you're new, welcome to the channel. And today we're going to be identifying what's the best time frames for you to trade from and identifying the key levels, okay? So let's jump straight into it as always. When choosing the correct time frames to trade from, guys, there's no magical time frames to use, okay? There's no time frame better than the other. All it boils down to is your personality and how you like to trade, okay? So what do I mean? What I mean is how much time can you dedicate to Forex and how much time can you dedicate to looking at the charts, okay? So you've got to ask yourself, can I dedicate 2 hours a day to Forex? Or can I really only dedicate 4 hours a week to Forex, okay? So these are just the two questions I want you to ask yourself, okay? And if your answer is, I can only dedicate 4 hours a week, then the time frame for you is going to be the higher time frames, okay? It's going to be the 4 hours, the day time frames, because the setups are slower, right? If you're only able to dedicate this amount of time, it's most likely because you've full-time work, you've got family, you've got kids, and you can't dedicate much screen time to analysing the charts. So if this is your answer, the best time frames for you are going to be the higher time frames, okay? So let's jump into this chart and let's have a look at the 4 hour time frame. So when working with the 4 hour time frames, everything's the same, right? The structure's the same, the way we identify the key levels will be the same, but the only difference is the setups will be slower and the market will move slower, okay? So this will fit perfectly for people that can't dedicate as much time to analysing the charts because it allows them to identify some levels and set alerts and obviously have price move slowly, and once they see this setup they can enter and then leave it. They don't have to check the screens for the next week, 2 weeks, okay? So I just want to break down briefly identifying the key levels and understanding the structure on the 4 hour, okay? So everything stays the same when looking for structure and market behaviour, okay? So here, just for this example, we can see that price is creating higher lows and we're actually creating higher highs, okay? So this indicates to us that price is trending up, okay? So this will always be the same whether it's the lower time frames or whether it's the higher time frames. All that's going to change, guys, is that price is going to be moving slower. So you've got to ask yourself, does this suit me, or can I be more volatile and play with the market's behavior at a quicker pace, okay? So identifying the key levels is always going to be the same, guys. What I'm looking at is I'm seeing a key level through here, and if you guys spotted it already, nice one, right? Because we can see that this is a key level clearly because there is wick rejections at the area, okay guys? So when you're working with the higher time frames, these key levels are going to be stronger, right? Because on the 4 hour, if price is rejecting an area for at least 3 candles, this is a whole trading day of price rejecting this area, okay? So when we're rejecting price at a key area or key level, it usually indicates to us that this is a strong key level in the market on the higher time frame, okay? But everything's staying the same. You just got to ask yourselves whether you can be more patient and wait longer for the setups, obviously while you're working and while you're doing other things, okay? So let's drop down to the lower time frames and ask some questions about that. Okay, so if you're someone that has said, okay, maybe I can dedicate 2 hours a day or even 1 hour a day to trading Forex, okay, so the best time frames for you or the better time frames for you are going to be the lower time frames because you're able to spend more time analysing the charts and identifying entry points or identifying your own strategy, okay? Everything stays the same, right? Everything, the structure, behaviour, how the market moves, the key levels, identifying the key levels, all of it stays the same. The only difference is that it's happening quicker, right? So if you're someone who can deal with the volatility and you're not someone who is easily frightened by stuff going on or by quick movements, then this is something for you because the market on the lower time frames moves quicker, okay? There's more chance to make money, but there's also more chances to lose money, okay? So you need to make sure and ask yourself whether you can deal with that when working with the lower time frames. But breaking this down and identifying the key levels is the exact same to what we're doing on the higher time frames, right? Just from my eye, I can see that price is trending up, okay? I can see that price is making here, we made a higher low, and we can also see here another higher low, right? And then we can see here a higher high. my key level I'd be drawing here, sometimes the key level on the lower time frames are not going to be as strong as they would be on the higher time frames, but they're still a key level. But like I said, it moves quicker on the lower time frame, so key levels are going to be broken, key levels are going to be made a lot more frequently than they would be on the higher time frames. But the principle stays the same. If we see an area with rejection, it can be our key level, okay? So what am I seeing here? I'm seeing price here as a key level, okay? Why? Because price actually failed to break above it for a good few hours, okay? We can identify our wick rejections in this area, okay? So whether you're working with the higher time frames or the lower time frames, identifying the key levels and the structures are the same, right? They're the exact same. Structure is structure no matter what the time frames. You just need to ask yourself whether you can deal with the volatility, whether you have the time to keep analysing the markets a few hours a day, or whether you can, or whether you are busy, you've got a busy schedule and you can only dedicate 4 hours a week to trading Forex, okay? So these are things you need to ask yourselves. But as you can see, the structure and how price moves and how price creates these structural points will stay the same whether it's the 4 hour or the 15 minutes in this example, okay? We know that this is also a key level because we can see price actually pulled back and came back to this level, okay? We then made what we call a little false breakout here, and then we shot up to the upside, okay, because we were in a bullish trending market, okay? I try to keep this video short and simple, guys. There's not really much to it other than your personality and how you go about your day and how you go about your business, okay? If you're busy, you've got a busy schedule, then the higher time frames are going to be for you, okay? If you're able to dedicate more time to Forex and you're more committed to spending screen time and analysing the markets, then the lower time frame is going to be for you. But hopefully you understood from this video that structure is structure. It doesn't matter what time frame. All you want to do is identify structure points to identify trends, okay? If you guys enjoyed this video, appreciate if you leave a thumbs up, and I'll see you in the next one.